Greetings, friends, and welcome to the channel Paisa Ka Gyan. Monday morning has started with a sharp downturn, and this applies not just to the cryptocurrency market. We are witnessing a general decline caused by various reasons ranging from understandable to quite exotic. Let's try to analyze this morning's situation while it's still fresh. However, as always, it's important to remember that the President of the United States can radically change the market dynamics with just one word or action. At the moment, we see a significant drop, and no one can guarantee that a single statement from him won't turn everything around or, conversely, exacerbate the decline. Let me remind you that last week, markets grew significantly due to hopes that Trump wouldn't impose new tariffs and duties on other countries, at least not on the scale that had been anticipated. The cryptocurrency market heat map clearly reflects the current nervousness. However, an even fuller picture can be seen on the Chicago Mercantile Exchange. At the start of trading there, we observed a gap, or price discontinuity, albeit a small one. It may not be visible on some timeframes, but on the 30-minute chart, it is quite evident. This gap of $105,000 is worth noting. At the same time, we observe that investor sentiment aligns with the current state of the market. Essentially, this could summarize the overview of the cryptocurrency market. However, if we shift our focus to the S&P 500, we see a very similar situation. While I don't specifically track gaps there, on the Nasdaq, they are definitely present, and you can see this for yourselves. As we can see, the S&P 500 index has fallen below the level it was at, for example, on 23rd January, since the start of trading. Let's analyze the reasons for this occurrence. In my opinion, there are several. Let's set aside everything related to the Federal Reserve System for now, as it is already clear that markets are nervous ahead of the upcoming FOMC meeting under the new president. This is especially true given the potential conflict between Trump and Jerome Powell, who is likely to be dissatisfied with maintaining the current borrowing rate, as the consensus forecast suggests. It is worth recalling that they have had conflicts in the past. Trump had insisted on negative interest rates at the time. Powell did not give in but took another route. He reduced the rate by 50 basis points during the last days of the Biden-Harris administration. However, that is another story I've mentioned earlier. There are data showing that more than 40% of agricultural farm workers in the United States are undocumented immigrants. Additionally, two-thirds of agricultural product sales in the U.S. come from just 5 major categories of goods. At first glance, this might seem unrelated to the markets, but upon deeper reflection, the potential consequences are quite serious. For instance, if all undocumented immigrants were deported from the United States, even though this country was originally built by immigrants, enormous problems would arise, particularly in the dairy industry. The broader picture reveals that Wall Street, up until now, had hoped that Trump would ease his stance on immigration policies. This is because strict measures could significantly impact the growth and revenue of corporate America. However, investors were largely unconcerned about this issue for a long time as, according to Bloomberg, no one in their right mind believed Trump would fully implement his plans. Nonetheless, analysts and strategists warn that mass deportations could have a costly impact on the U.S. economy. Such actions could overturn the foundations of industries like hospitality, leisure, agriculture, food production, manufacturing, and construction. Although the Trump administration declared a state of emergency at the southern border and started sending deported individuals back to Central America, there have not yet been large-scale workplace raids or mass deportations. It's possible that these actions have been delayed, but so far, we have seen no confirmation of widespread measures being implemented. Today's sharp events reminded Wall Street that with Trump, anything is possible, even the most unpredictable outcomes. One striking example is the situation with Colombia. Today in the United States, and on European territory by tomorrow, Trump unexpectedly hit Colombia with a 25% tariff and sanctions as part of an immigration dispute. However, here's a small spoiler: as of now, the conflict has been resolved, and the White House has decided to withdraw the sanctions. How did it all unfold? Initially, Colombia refused to accept its deported citizens and tried to resist Donald Trump's pressure. In response, Trump quickly threatened to impose an emergency 25% tariff on all Colombian goods exported to the U.S. Moreover, he announced that this tariff would be increased to 50% within a week. For Colombia, whose economy heavily depends on exports to the United States, such a threat could have been devastating. The country's key exports include oil, gold, coffee, and flowers. While oil, gold, and coffee might have managed to withstand such a blow, for the flower industry, it could have been catastrophic. A 50% tariff was not just a threat to destroy the industry but could also have severely destabilized the country's economy, leading to a budgetary crisis and other negative consequences. Ultimately, after this pressure, Colombia agreed to accept its deported citizens, and the planes carrying migrants were allowed to land in the country. It seems that the story ended there. However, for Wall Street, it may have only just begun. Such abrupt and unpredictable actions by Trump are causing concern among market players. These events have only further contributed to the decline. Initially, the reasons for the downturn were called exotic, but as we delve deeper into the details, it becomes clear that they are very real and create significant tension. Everything that had previously driven the growth of American stocks, especially the so-called Magnificent Seven leading companies, is now coming under serious question. Here is the story of investments in OpenAI. In 2015, the company raised $1 billion. In 2019, another $1 billion was invested, and by 2021, the total amount of investments reached $11 billion. In 2023, Microsoft added another $10 billion. These funds were directed towards the development of ChatGPT and other products. Subsequently, in 2024, OpenAI raised an additional $6 billion, and the company's valuation reached an impressive $157 billion. I would also like to remind you that Trump promised to allocate $500 billion to the development of the artificial intelligence industry. At first glance, everything seems very positive. However, just last week, questions began to arise due to a Chinese product called Gitspeak. According to assessments from numerous independent experts, this product is comparable in quality to ChatGPT. The most surprising part is that its creation cost only $55 million, using 2,000 NVIDIA GPUs and $5 million for training. In total, the entire project cost a sum that is nowhere near the multi-billion-dollar investments made in OpenAI. This raises questions about the significance of such enormous investments in OpenAI. Why? Because Gitspeak, a comparable product in terms of quality, was created for what seems like pennies compared to OpenAI's spending. This fact might begin to shake up the artificial intelligence industry in a serious way. I have long wondered what significant steps have been taken after the invention of services like ChatGPT, Midjourney, and others. Many users have embraced ChatGPT, while others opt for more affordable, free alternatives. Personally, I still use Midjourney to create covers for my videos and occasionally generate images. However, I believe that soon even paid services will become less in demand. Alternatives will emerge offering equally good functionality, but with different monetization models. For instance, Users might need to watch a 10-second ad to download an image, an ad that could easily be skipped using ad blockers. In this way, the artificial intelligence market is clearly moving toward newer, more accessible solutions. I am not dismissing artificial intelligence entirely, but at the moment, this market needs truly bright informational triggers for the segment to continue its active growth. For instance, a major breakthrough in the medical field. Imagine if artificial intelligence were to develop a drug capable of curing an incurable disease or significantly improving the quality of life for people with conditions like diabetes or pancreatitis. Such a success could become a powerful catalyst for the industry's development. However, the current situation is different. The recent news about the Chinese product Gitspeak, which was created for just $55 million and shows results comparable to ChatGPT, has indeed raised concerns in the market. A direct comparison, $55 million versus OpenAI's multi-billion-dollar investments, makes many question the future. Is it possible that such a relatively inexpensive product could replace the more costly ChatGPT? This question is now a subject of active discussion. In fact, there is already evidence of Gitspeak's impact on the market. For example, Nasdaq 100 futures have shown a decline, which is being linked directly to this Chinese application. Interestingly, Gitspeak has topped the free downloads chart in the U.S. Apple Store. The data for Google Play still needs to be verified, but the fact remains, Gitspeak's popularity is growing. What's interesting is that, earlier in the day, the topic of Gitspeak wasn't at the forefront. Discussions were more focused on issues like Colombia, the Federal Reserve, and other recent events. However, just an hour ago, Bloomberg published an article with the headline that Gitspeak is shaking up the market as traders are concerned about the future of U.S. leadership in technology. The article paints a pessimistic picture, adding to the overall unease. Taking all of this into account, I can't help but wonder, could Gitspeak become the very needle that bursts the artificial intelligence bubble? Only time will tell, but the situation undoubtedly deserves close attention. We need opinions from more qualified experts who can objectively evaluate and compare the results achieved with multi-billion-dollar investments versus what has been accomplished with just $55 million. If experts confirm that the Chinese product Gitspeak is no worse or perhaps even better than solutions created with investments amounting to tens of billions, it will present a serious challenge for companies betting on artificial intelligence. In that case, they will have to prove that their products truly offer more advanced capabilities and advantages. We continue to monitor the development of this situation and the rapidly shifting market sentiment, which, as we can see, changes very quickly. While America has gone to sleep with headlines like these, in 7-8 hours, it will wake up, and the situation may unfold even more rapidly. Stay attentive and cautious. That's all for now. This was the channel Paisa Ka Gyan. If you haven't subscribed yet, make sure to do so. And don't forget to hit the notification bell so you won't miss new videos. There's a lot more interesting content coming up. See you soon.